Hello, everyone. Can everyone hear me? Let me know in the chat if you guys can hear. Just say yes if you guys can hear me. Just drop some yes in the chat if you guys can hear me nice and clear. You guys can see me nice and clear. You guys can see my charts nice and clear. How's it going, Steven? Meg, I know Meg. How's it going, Meg? Robert. Bunny, I know Bunny as well. A lot of you guys here from our community. How do I see all the details on this? So today, guys, we're going to be going over kind of how I approach the markets. So we're going to go over the setups that I look for and how I identify setups. Now, the way that I trade, I tend to trade with one-to-one risk reward, and I tend to trade with a higher win rate as a result. You can go for a 1-to-2 risk reward ratio on the strategy that I trade, but you're going to get a lower win rate. And that's up to you whether you want to have a lower win rate, yet a higher risk reward. Okay, if that works with your psychology, then that's what you need to run with. However, if you are someone who needs to win more often to keep your psychology at a constant rate, then you're going to be one of the people that wants to go with a lower risk reward and go for the higher win rate, right? So that's how risk reward and win rate are generally correlated and generally have that relationship, right? I'm trying to see now really quickly. How can I see the details? I can't seem to see. Just 1 second, guys. Let me see. Doesn't want to show me any of the details on here. So yeah, today I'm basically going to show you guys my entire methodology. I'm going to go through it. If you guys have watched any of my YouTube videos, you already know exactly how I trade. It's super simple. Today our setup did not play out, and I'll go over that for a second. Let me just see why it is not. If you just look up Garland Trader, you guys will be able to see my YouTube. Can you guys hear me? The sound still giving issues or no? Just let me know. If you guys can hear me, just let me know. Say yes in the chat if you guys can hear me and it's not breaking up. Okay, perfect. So guys, one thing I'd like to point out is that with Blue Guardian, the reason I'm on the stream with Blue Guardian is pretty simple. I've been trading with Blue Guardian longer than I have worked with Blue Guardian in terms of any kind of marketing, any kind of content creation. I was a client of Blue Guardian before anything else. In fact, before I even started before I started creating content with Blue Guardian, I had already done $18,000 in withdrawals from Blue Guardian. Okay. And today, up until today, where I've done over $40,000 of withdrawals with Blue Guardian. I just recently posted the certificate in, our Discord as well. Because I just managed to do a $21,000 withdrawal from Blue Guardian. It was one of my biggest ones recently. The reason I tell you this is because I have used one strategy and one strategy alone to achieve these kinds of results. I'm going to show it to you guys today. I'm going to show you how I look at the markets and how you can use a prop firm like Blue Guardian to get those kinds of results, and what kind of strategy you can use to realistically produce results like that. So there's just one approach that I look at. One very simple approach. I use 2 time frames. That's all. And remember, guys, all strategies are essentially just a different version of break and retest. At the end of the day, you might have a different word for this over here. You might have a different word for that. It might be a breaker block. It might be support and resistance. It might be supply and demand. It might be, it could be a million different things that you can call it, right? But at the end of the day, it's just a break and retest strategy, okay? So I simplified everything to simply looking for 2 zones that we're looking for a breakout from. Okay. And we want to trade generally with the trend as well. Right. So at the end of the day, that's all I'm looking for. 2 zones where price is going to break and close above or break and close below. That's it. That's all I'm looking for every single day. What we identified today was this zone right here. Okay. Which you can see has been supported multiple times. We've had price react here, react here. We've had price wick below, which some would call a liquidity sweep. Okay, you can call it whatever you like. We had price wick below once again recently, okay, and push back. So you can tell that this zone here is a significant zone. Doesn't take a genius to figure that out. Okay, and the criteria I look for in these zones, you can't choose any zone. The reason that I like this particular zone as an area of interest is the fact that we've had multiple reactions in that area. And again, all I'm looking for is V-shaped reactions like this. But in those reactions, we cannot just have one of them on their own like so. We cannot just have one of them on their own. We need to have one and something else near it to support it. So you can create a zone like this. Okay, and you can see that right here. Okay, and you can see it goes even further back to here as well. So all we did was we created this zone here because it lined up with that. Now you might ask, why have we not expanded this zone to include this? Well, because the market had not opened yet. So if you look here, market opened here, none of this was here. So all of this happened after the market opened. And as you can see, price swept the zone and swept the zone again. And for a trade to be valid, for us to take this particular trade here, why did we not take any trades? Because our main confirmation is that we have a break and closure below. These candles must close below on the 5-minute time frame. We did not have a candle body closure below the zone. We only had wicks, which faked people out to the downside. And this is how the strategy I trade keeps me safe from fake outs. We must have a candle body closure. We cannot trade based on a candle still printing, because it can wick out like this and push in the opposite direction. So we were kept safe in this area. So yeah, again, it's a simple break and retest of significant zones on the 5-minute time frame. That's all I'm looking for. If we were looking for buys, I would be looking for buys above this zone. Okay, the reason I would be looking for buys above this zone is because we've had a reaction, a significant V-shaped reaction over here, and we had one close by as well, which is why I extend my zone to include that. Now, what would have happened, okay, if we were all the way back here? Okay, I'm not going to replay in case my internet connection goes back, but if we were all the way back here and we had nothing to the right, okay, this zone would not be valid for me. Can somebody in the chat tell me why this zone would not be valid for me? And I know some of my communities in the chat. So let me know in the chat why this, before market open, before anything to the right, why it would not be valid for me. Come on, someone from my community, tell me in the chat. Samantha got it. So Meg and Samantha, you guys got it. It is only considered a pivot area. This on its own is just a pivot. There must be what we like to call a buddy candle, which is what formed afterwards, okay? So we need another reaction close by, which we have right here. And then that zone becomes confirmed for me. As you can see here, we had one reaction here. We then came back, reacted once again. And then this zone becomes valid for me. And what you can see subsequently after that, we had multiple reactions in and around this area. Okay, so that's what we look for. Number one is the two zones to trade from. Today, you can see that the zones that we chose kept us safe. Okay, choosing the correct zones keep you safe. And the way you do that is by having buddy candles and understanding V-shaped reactions. Okay, so we had that. We had this significant zone here. We've had price sweep it multiple times, and we've been safe. We haven't gotten into sells because we need price to break and close below before the trade becomes valid. What I'm also observing, and I like to look at just as a confluence, is the 15-minute or 15-minute orb, okay, opening range breakout, which is just this big candle here. I'm just observing it, okay? That's all I'm observing. And the reason I observe it is because significantly, this zone can be used often as an area for fake outs. And you can see this happened right here. So if you look on the 5-minute, you can see it swept this zone as well and pushed in the opposite direction. So what would have been good is if we had price break and close below. Then we could have had price retest our zone here and we take it lower, right? So that's really what I'm looking for on the 5-minute. We also look at the 4-hour structure, okay, which is a confluence. 4-hour structure is not our main reasoning for a trade ever. It's just to get a direction and to understand where we are. Okay, it's important to understand the context in which we are taking trades. So on the 4-hour time frame, you can see that we've been creating higher highs and lower lows, right? And we cannot create higher highs and lower lows. So we've been creating higher highs and higher lows, right? On the 4-hour time frame. How do I know that? Okay, so if we look to the left, we've had price push up, pull back. Okay, we then had price take out that high. Once price takes out that high, we then take the lowest point between here and the point where we broke, and we look for the lowest point, which is this. This then becomes what we call a protected low, okay? Then we push up and we pull back once again, okay? We then wait for price to take out that high. We have price take out that high once again. We then look back for the lowest point between this point and this point, and it's now here. So essentially what we're determining is the movement of price, the pattern of price is that it will take out the high, okay, and then retrace. Take out the high and then retrace. And what often happens on the higher time frames is it will take out the high, like here, okay, push it a bit further, retrace, but it will respect that low. You see here, it did not come past this low. Once we took out the high once again, price did not come past this low. We can see here, price then pushed a bit further, retraced. It's now taken out this high, okay? And this would now be our low here, okay? So currently we're in this range, right? This is the leg of price we are currently in. So I'm expecting price to respect this and continue up, okay? It's already taken out this high, and I'm expecting price to retrace and continue upward like this, okay? But again, that is more speculation. What you can see, however, is that we've taken out multiple highs to the upside, which makes us clearly bullish. However, you can simplify this even more. And the way that I simplify determining trend is simply by using the 50 simple moving average, okay? So the 50 simple moving average you can put on your chart, put the length to 50 on the SMA, and it's this blue line here. What do you notice? Zoom out. What do you notice right away? It's pushing up. It's been up for days. Trend is bullish. That's all you need to do. Okay, that's generally what I do, is I just zoom out. This is pointing up. Okay, we're bullish. That's legitimately all I do. Then on the 4-hour, what I like to do is take note of any significant zones where we've had V-shaped reactions in recently, more notably one that has buddy candles as well. So similarly to what we do on the 5-minute, so the first one we can see quite clearly is this zone right here, okay? We can see price had a resistance here, and we've come back to retest it, okay? And that's a recent zone. We then also had all-time highs right here, which I would then mark on as a zone as well. Okay, we've now got these all-time highs up here, which I would be wary of as well. You don't want to be taking buys into these all-time highs up here. So that's essentially all of the zones I would look at, right? That's all of the things I would mark on the chart. I would look for the most recent V-shaped reaction with buddy candles on the 4-hour, because why? We don't want to take sells into the zone. We only want to take sells once we are cleared of this zone. We can take sells lower. Okay, then we can worry about these zones down here, right? So if we are close to these lows here, I'm only going to want to take trades back into this range. Similarly, if we are close to the highs down here, I'm going to want to take sells down into this range. But remembering that one of our confluences is that the trend is bullish, right? So the trend is bullish overall. That means that one of our confluences is against us technically in this sell trade that we marked out for today. Okay, but there were other confluences that were with us for that sell today. What is your favorite sport and dish to eat? Sport. Dude, I don't follow sport a whole bunch. I guess like probably paddle or tennis. And dish to eat, dude, like whatever. I don't know. Pizza. So yeah, we are going to be doing a 50K Blue Guardian giveaway today. We're going to be giving away 2 of them today. It's going to be towards the end of the stream, which will be in about 40 minutes from now. So you guys need to hang out with me, take notes. We'll go over everything today. I don't trade ICT concepts. I simply trade break and retests of the range. That's all I trade. And I've been doing it for over 2 years, just simply trading break and retests of the range. I used to trade ICT concepts and SMC, but I changed to simply trading break and retest because it was so simple. And it also requires very minimal of my time. As of right now, I'm not looking to take trades because my time frame for trading is already done. I trade from market open until about now, and then I'm done. How did you overcome the fear of losing? The fear of losing can be overcome really, really easy, as well as the fear of missing out as well. The fear of losing can be overcome by simply scaling down on your trades. Don't get in with a whole bunch of risk. If you're scared to lose, it means that you're risking too much. It means you've put too much on the table. If you've bought a prop firm evaluation that is using your rent money, you're going to have a fear of losing because you've just spent your rent money on your prop firm evaluation, right? It's a no-brainer. The same with fear of missing out. If you've got a fear of missing out, well, what you're going to want to do to mitigate the fear of missing out is just get into the trade, right? Then you're not missing out. That's all I do. I get into the trade, but I get in with lower risk. So I have 3 different risk profiles. I have full risk, I have half risk, and I have like less than a quarter of a risk. Okay. Sometimes it's 0.125% risk. So essentially, what I'm going to do is if the strategy is high probability, and I use 5 different confluences to determine whether the strategy is high probability or not, I'm going to get in with full risk. If it is a B setup, I'm going to get in with half risk. If it is very low probability, but it's valid, and I'm feeling like I'm about to get fear of missing out, I'm going to get in anyway, but with very, very low risk. Or I'm going to get in with an account that I'm not that worried about, whether it be an evaluation, whether it be, I'm not going to get in with my actual funded accounts on a setup that isn't good. Do you also trade FX? I do in my community trade FX, but we stick a lot to indices. So we trade forex, but mainly we're trading NASDAQ, NQ. So you can trade the CFD version of NASDAQ. So like what you would be able to trade on regular Blue Guardian, but then you can also trade NQ like Blue Guardian futures. I can't actually see the stats on the stream. Let me see if I can see it on my phone. What's one underrated skill outside of the charts and numbers like psychology, discipline, or lifestyle habits that makes the biggest difference in trading success? That's a good question, Precious. The one underrated skill outside of charts and numbers that can help you in trading success is just being consistent and also being delusional, basically being delusional. If you're delusional about how your success will turn out, if you are delusional about how your success will turn out, you've got basically unlimited potential, because there's going to be a lot of people telling you that it's impossible to become profitable trading, that it's impossible to make over 5% a month consistently with trading. There's going to be a lot of people that will tell you that. But if you're delusionally positive about yourself and your strategy and your future, you're going to make it. Like, you will, or you'll die trying, but you're more than likely going to make it. And I was one of those people that was positive in a delusional way, which can lead to you losing your mind, but it can also lead to you actually getting somewhere, right? And getting payouts, getting, multiple 5-figure payouts. Because the downside to that, though, is that when you do get to 5-figure payouts and you've made like a $10,000 withdrawal in a month, $20,000 withdrawal in a month, it doesn't feel that great because you kind of believed you were going to do it anyway. But if you can stay delusionally positive about yourself and your strategy and your trading, that's going to pay you dividends. The other thing that you can do is don't tell anyone about your trading. The more people you tell about your trading, the more people are going to tell you you're ridiculous and you should get a real job. Right? How's that going to help you? It's not going to help you at all. So don't tell anyone about your trading, because you're basically just screwing yourself over. You're asking for people to you're asking for people to insult you. You're asking for people to put you down if you tell people about it, because nobody's going to understand it. Nobody understands how this works except for you. Most people in this industry right now, and most people that are doing well in this industry, are generally the more quiet guys who aren't big on social media, right? That's true. That doesn't mean, however, that everyone on social media is a lie. Okay. There are consistent traders who can show you payout certificates, like myself. Okay. Not to toot my own horn, but if they can show you consistent payouts, it means that they're doing something, because you can fake a payout, but it's very easy to catch. You just ask the prop firm, right? You can very easily figure that out. And a lot of these prop firms, Blue Guardian as well, you've got QR codes, right, on a lot of the certificates. I don't think all have, but you can very easily tell if it's photoshopped or not, right? So you have to, right, either figure out trading for yourself through free education like this, which again, on my YouTube, I try to make available for as many people as possible. I pretty much explain my whole strategy in detail on my YouTube channel. That's there, right? Or you can find a mentor, whatever, that's fine. But just understand that that's risky, and that 80% of people that are offering mentoring, they're either going to give you something that's mediocre, okay, that, you know, isn't super robust, something that you can get for free on the internet anyway, or it's just nonsense. So understand that. And the other thing is people that trade live. So for example, like I trade live with my community every single day, and I've done it for over a year and a half, and I've recorded all of the results. So you can't really fake that, especially since every single trade is video recorded. And I've video recorded it and have an archive for over a year and a half. So that's a little bit difficult to fake. Yeah, the community that I have, if you just look up my name on YouTube, you'll find me. You'll find my YouTube. I'm lacking in psychology. Got any advice for me? You need to be specific about what psychological issues you're having with trading. And generally, the main psychological issues that people have with trading is fear of missing out, okay, and greed. Those are the two. Fear of missing out or greed are the two biggest issues that traders face, and they can be solved with one thing. The one thing that you need to solve fear of missing out and greed is simply backtesting your strategy. If you've got enough data on your strategy, you're not going to have fear of missing out, because if you sit out the trade that isn't valid, you know that long-term your strategy is going to work out, and you're going to save yourself long-term if you sit out the invalid trades, because you have the data that proves that. The same thing with greed. Greed is simply a symptom of fear of missing out, whereby you miss a trade and then you see another trade and you risk too much on that particular trade, or you try to hold that trade for too long. If you've backtested your strategy, you know how long you need to hold that trade, because you've tried different risk reward models, right? You've got the data to show that taking profit at 1-to-1 risk reward or taking profit at 1-to-2 risk reward pays the most over a period of 1-2 years. Simple. Fear and greed solved. Collect the data, spend the time, collect the data, first in back testing, but also live data with real trades that you are logging. And this takes long. So spend at least 3 months trading real setups, logging them as if you are back testing. And if you make a mistake, because emotions cause you to make mistakes, especially in the live environment, which is why I recommend actually doing this live for 2 to 3 months before, going anywhere real or going for big accounts or going and investing significant amounts of money. You'll know you're ready if you start with a very small private account, very small broker account, or a very small prop evaluation. If you want to have a little bit of skin in the game, so you have some emotion, okay? Because it's a bit like going to the gym and lifting a barbell with no weights on it. You're wasting your time. You need to put some weight on there, but not too much. If you put too much, you're going to injure yourself. So get a small prop account or get a small broker account. Trade that for 2 to 3 months, okay? It must be very small. It cannot be too big. Otherwise, your emotions will play up. And then practice, because you're building the muscle, your psychological muscle, basically. It's like I keep saying, it's the gym analogy. If you go to the gym and you pick the heaviest weights on day one, you're going to break your arms and you're never going to come back to the gym. If you start trading today and next week you buy the biggest prop firm evaluation that's available, you're going to lose all your money and you're not going to come back and you're not going to trade again. Or you're going to jump to something else, do the same thing again, and you probably will continue that cycle chronically if you have a gambling mindset, because that happens to a lot of people. They try one strategy, they buy the biggest prop firm evaluation they can, or they deposit as much money as they can into a broker. They lose it all, try a different strategy, come back again. Shiny object syndrome, and the cycle continues. That's a very common, very, very common cycle I see in traders. And you'll notice that a lot of the people that likes to blame outside influences, those are generally the people that have that kind of gambling mentality. What's your journal? I video record all of the trades that I take on live stream, and I log that. It's available on my Discord. I want to see if I can do a trade recap for you guys. Just need to find a trade we took last week, because I just deleted all the drawings of my chart prior to this. I think there was one. Anyone from my community in here that can tell me the last trade we took on NQ? My Discord's free to join. If you just look up my YouTube, you look up my name on YouTube, you'll be able to find me. The Discord is free to join. I do live trading, and that is paid, but you can join my Discord for free. And then I do live trading once a week. That's also free. What is your win rate? My win rate's about 60 to 70%, depending on the month. But yeah, over the long term, it's around 60%. Oh, so someone was just asking how I journal trades. So yeah, when I journal trades prior, what I would use is just a simple spreadsheet. I didn't use anything fancy like TradeZilla or any kind of app. I just used a spreadsheet. When you're stuck in a losing streak, how do you reset mentally and get back into peak performance mode? That's a pretty good question, Precious. So for me, the crucial thing is taking one trade a day only. Only one trade a day. And the reason I do that is specifically so that I don't go into a losing streak and I don't get mentally bogged down by the previous trade I took. Because if you take multiple trades at once, you're going to find yourself every time you're taking a new trade being psychologically affected by the previous trade. Whether it's a winner or a loser, your previous trade is going to have an impact on the next trade you take, because there's no time in between to calm down emotionally. If I win a trade right now and I take a trade in, let's say, 5 minutes, I'm still on a high from that previous winner, and I'm probably overconfident, and I'm probably trying to double or nothing my money, right? And I know a lot of you guys have been in that situation where you win a trade and you're like, I'm just going to risk what I just won and like double it. You end up losing all, and then you end up going into a a loop of losing. You basically spiral into a revenge trading sequence, and that's something that is very common. And that's why I only take one trade a day, because if you've got 24 hours between your trade today and the trade you take tomorrow, you're coming back tomorrow a lot more level-headed, and you're not going to spiral into a losing streak. However, all strategies have losing streaks, and what you're going to need to do for that is pretty simple. You just need to take a break from the charts for about a week. That's pretty much what you want to do. If you're taking 5, 6, 7 losses in a row and having 5, 6, 7 losing red days in a row, you're going to want to take at least a week off the charts so that you can reset. But then also collect data, reassess, okay? Because their strategies can be changed and they can be modified to reflect current market conditions. Luckily, the strategy we trade is quite robust, so you can kind of there's enough discretion to the strategy whereby you can adjust to the market conditions. Because if you are trading a fully mechanical strategy, market conditions change, and so you cannot adjust. Correct call is saying there was a setup on the 24th. That was good. There was also one on the 1st of the month. That was really good. Okay, let's check the one on the 1st. The one on the 1st, there was a news event. Assuming, just trying to remember the setup here. Don't think we ever revisit that. I don't think there was a setup on the 1st. Don't think there was a setup on the 1st. As a beginner, what things should I look for? That's a very, I can't answer that. How many risk reward are you taking? So for my strategy, I use either 1-to-1 risk reward, or I'm using 1-to-2 risk reward ratio, right? And again, those are two different risk profiles which have two different win rates. So if you've got a higher risk reward, you're going to have a lower win rate. And so you have to decide, do I want a higher win rate with a lower risk reward, or vice versa? And that's down to your psychology, because some people like to win more risk reward more often. Okay, less often. But the same is true if you reverse those two roles. You have to decide which you want. And for me, I prefer to win more often and win a bit less every time I win, right? Because psychologically, in my head, I'm winning more often, which keeps me on track more, right? There's less of a chance of a losing streak if you go that way. Trying to figure out where the setup was. I think it was probably this, to be honest. think we probably took a break of that, but I need to actually go back and look because I don't want to just take it out of fresh air. The first was a quick 1-to-1. Okay. But I can't remember which zone we took it off of. I know what I would have taken if I look at it now, but I want to be kind of transparent about the zones that I take. Let me try and have a look real quick. Okay, I'm on the right time frame. Second, I believe we didn't trade. The first, I think, was literally this zone here, if I'm not mistaken. That's a little bit inside of the range. Probably would have waited for... Oh, it was this zone, was it not? Yeah, that's what it was. What time was this? Yeah, that's within our time as well. What are your confluences before taking a trade? I'll go through this trade that we took on the first with you guys so you guys can understand really how the strategy works. Let me just quickly draw it out. Okay. So this was a trade that we took on the first. So the first thing we look at is obviously the 4-hour time frame. One of the crucial confluences we look at is where's the 4-hour time frame going? And you don't need to look at it very different. You don't need to look at it very in depth or anything like that. You can clearly see where are we going? Up. We're creating high highs, we're breaking highs and retracing, breaking highs and retracing. So it's clear. The other thing we look at is the 50 simple moving average right here, which is clearly pointing upwards at this point. So again, throwing the 50 SMA on your chart is one of the easiest ways to tell the trend very quickly. You can see it's very clearly pointing up. So my bias is bullish for trades, okay? Then what I'm doing is going down to the 5-minute time frame. That's the next step. On the 5-minute time frame, I'm identifying two different levels, right? I'm identifying a level that I can take buys from that's close to where price is, okay? So we've got this area here. And then we've got an area that we can also take sells from, which would be down here. We just identified two levels. Now, this level over here, why would I not use this particular level here? Well, you can use this level here. However, we have already passed that level, right? So that is a potential level. However, we've extended way past that. So when we come back to it, it's possibly not going to hold as well. So we've just broken past this level over here, okay? It's a clear support and resistance level. But why have I chosen this as a significant level? Well, it's got multiple supporting candles, right? So what you can see if you look at this reaction over here is that we've had price push into it and push out. But if you look, we've actually had more than that if you zoom in. We've had price push into this zone and push away multiple times. We had price push in, push away. push in, push away, push in a little bit further and push away. So we've actually got 1, 2, 3, what I like to call buddy candles. These are all buddy candles because we've had multiple reactions on lower time frames in these candles right here. You can also see if we go back here, we pushed in and pushed away once again. So that too is a buddy candle over here. This is also quite nearby. I didn't include this in my drawing because if I make this zone too big, it's going to look messy. So I didn't include that. But you could technically include this down here, which then also includes this reaction down here. And I just made it a little smaller. The most important part is the high of the zone, which is right here. So that's how I select my zones. Okay, so I've selected this zone. There's also a zone up here. Now, this zone up here is a potential zone to take a trade from. However, one key thing about the zone is that there are no buddy candles. You can see it's just pushed simply in and pushed simply out. So this zone is a lot lower probability than this zone here because it's simply pushed in and pushed out once. There's nothing next to it. There's no price next to it that makes that zone strong enough for me to where I would want to actually take it as a breakout. Whereas this, we've had multiple push in, push out, push in, push out, push in, push out. We've had multiple pushes in and pushes away from this zone. Okay. Now, what we're looking for is after New York Open, we're looking for price to break and close above one of these zones. Okay. And if we're taking sells, I want it to break and close below these zones. Okay. For buys, we must be above the 50 simple moving average. For sells, we must be below the 50 simple moving average, right? Now, price breaks and closes above. As you can see here, the candle must close on the 5-minute time frame for the trade to be valid. Once trade breaks and closes on the 5-minute time frame, it cannot just break and wick back down. It must close. Then we can start to look for entry as price retests the zone over here. Okay, we can look for entry once price retests the zone. I usually use anywhere between a 20 and 30 point stop loss, okay, depending on volatility. Okay, so what I like to do to determine the stop loss size is pretty simple. I simply measure each candle recently. And I generally do this by eye nowadays, but you can do this more methodically if you'd like. So you can see these ones here are all 30, and this one here is 25, and this one here is about 20. And you can see these are quite large. They're above probably 50. So I'm going to go for a 30-point stop loss here. If these were all below 20, I would probably be able to go between 20 and 25, but I'm just going to be safe and go for 30 on this. Okay. Now, when you're taking these trades, you're wanting to go for either a 1-to-1 risk reward ratio, which will mean a target of 30 points, or you can go for a 1-to-2 risk reward ratio with a target of 60 points. But remembering that if you go for a target of 1-to-1 with this strategy or any other strategy, you're generally going to have a higher win rate because the target isn't as far away. So it's up to you which you choose. If you choose to go with a 1-to-2 risk reward, you would then wait for price to come back, retest the zone, okay, which it does. It tags us in here, and then we push to our target, right? Now, in this case, you would have gone to 1-to-1 right here. So if you were a 1-to-1 trader, you would have taken 1-to-1 risk reward pretty much in 10 minutes. Okay. If you were going for 1-to-2 risk reward, you would have most likely gotten out at break even at this point right here. But this is the full methodology of the strategy that I trade. That's literally made me $40,000 with Blue Guardian alone. If I look at other prop firms and stuff like that, we're looking at multiple 6 figures. But I literally just use this strategy and that's it. I see Gideon in the chat. Gideon, will you be able to assist me with the giveaway, or is that too much? Just let me know. Otherwise, I can just do a random number generator or something like this. What do you think separates traders who survive long term from those who burn out within a year? Traders that survive long term have simple strategies. If you've got a simple strategy, it's easy for you to trade and consistently come back every day and be consistent. If your trading strategy is complicated, if you're having problems or you're in a losing streak, you're more than likely going to overthink things and you're not going to be able to stick to the edge that you've created or tested. So if it's simple and it has a small level of discretion to it and it's adaptable to market conditions, you're likely to be consistent long term and not burn out within a year. Will you be coming back? It's just today. I probably will be coming back, guys. So I will be coming back next Monday as well, more than likely. Guys, so it's very important that all of you on here for the giveaway. We're coming to the part of the stream where we do the giveaway. It's very important that you guys are following on the GuardianTV Instagram page, which will be linked in the description. You must be following the Blue Guardian page as well as the GuardianTV Instagram page. If you're not, and I pick you, it won't be valid. So make sure you go into the description and follow the GuardianTV Instagram page. Okay. Once you follow that, you are then valid for the giveaway. Okay. So just follow that on Instagram, and then you are valid for the giveaway. Okay. If I choose you and you haven't followed the Blue Guardian page as well as the Guardian TV page on Instagram, then you won't be valid. Liban, it's unlucky, bro. You have to be following those pages on Instagram. So if you follow the Guardian TV Instagram page, you are valid for the giveaway. Okay. If you have to create a page in the next 3 minutes and go follow them, then do that. Then you will be valid for the giveaway. Okay. Okay, so what I'm going to do, guys, for the giveaway, I'm going to ask a question for you guys. Okay. I'm going to ask a question. It's going to be a one-word answer that you need to give me. Okay. So you're going to answer that in the chat. Okay. I'm then going to choose a random number with random number generator, and I'm going to go down the list and pick one of you that answered the question correctly. Okay. So I'm going to give you guys maybe 20 seconds to answer the question correctly. And then I'm going to go down the list and choose one person with random number generator from that list. Okay. Okay. Let me think about the question here for a second. Let me think. It needs to be not too complicated because you guys need to get it, right? Okay. Trying to think of a one-word answer. So let's do a technical question. Okay. Let's look at candle patterns. You guys can see candles on the chart. You see this candle here. All right. The next candle that prints next to it. Next candle that prints next to it has broken and closed above. And it fully encapsulates the previous candle's wick and body. What do you call this? What do you call this candlestick pattern? Okay. Seeing you guys with the right answers. So I'm now going to wait about 10 seconds and then I'm going to choose one of you guys with the number generator. So I'm going to generate a random number and then go down the list. Guys, if you answer more than once, it does not give you a better chance to win. I will not choose you if you answer more than once. Okay, so we've got a few here. I'm now going to choose a random number generator. Okay, so I'm giving away 2 50K accounts today. Okay. If you've answered more than once, I'm not counting you, just so you guys know. Okay, so random number generator. Okay, I've got one person. Okay, next number. Okay, now I'm counting. Okay, so I've got both my winners. If you're spamming it in the chat, you basically have already been disqualified, so don't spam. I'm trying to tag them. Let me try and tag you guys real quick. What I'm going to do is I'm going to go on to the channel and I'll tag you. I've chosen the 2 people already. Just search. Okay. So I'm going to tag on my own page here. Why can't I tag specific people? So the winners are Hector and Hector, are you there? Let me know. And computer sciences with Mr. Johan. Comment below so I can get your name really quickly, because I lost it now. I was trying to tag it. Where's Mr. Johan? Yeah, Loot Hector and computer sciences with Mr. Johan. Congratulations. Tag you. Okay. I'm now posting it. So Johan and Hector just screenshot the announcement I just made. And then you guys can go and claim your accounts from the Blue Guardian Discord. If you guys need help, just message me, or just message Discord support. Congratulations, guys. Well done. We'll be doing giveaways on all the other streams as well, right? We're going to be doing giveaways on all the other streams as well. But congratulations to you guys. I'll be back next week, Monday. We'll be going over the strategy again. We'll be going over trades I've taken this week. Also, guys, you would have seen on Instagram on Blue Guardian's page that I've been documenting my trades on my Blue Guardian instant funding. I've taken a couple of losses on them, but we're going through it and we are documenting the whole journey. So yeah, you guys should check that out as well. So yeah, congrats to you guys. And I'll see you guys next week. Same time, same place. Cool, guys. Have a good rest of your day. Cheers, everyone.